it's interesting because maybe stablecoins to like crypto native people are like most boring narrative ever, but to a bunch of growth investors who have been starved for like any narrative to latch onto outside of AI, it's probably really, really exciting. And so I think anything stablecoins related or even crypto related, as we're already seeing with these like publicly traded tickers, is going to continue to accumulate like some of this latent like growth capital that has just been like looking for something else to latch onto.
What's up, everyone? Welcome back to Shoot the Shit Pod number 8. I'm your host, Matthew Nay. Take it back over from Dylan from last week. Glad he was able to step in and cover for me. But I'm joined by the Enterprise team with Sonny, Chris, and Andrew, and a little guest appearance from my neck of the woods on Protocol Services, Sam. And today is June 30th, and we have a loaded agenda where we're going to talk about some macro environment, all the Robinhood announcements we heard today. Apparently, Solana ETF is going to launch on Wednesday. And then some other stuff about stablecoins, some Launchpad wars, but let's get into it. Over the weekend and last week, I guess S&P today is hitting all-time highs. And we're about 3 months since Liberation Day, almost up 12% on the S&P since then. Gold is down 1%, but if we look over in crypto land, we have over those 3 months, Hyperliquid is up a whopping 242%. And then Bitcoin up 26%, ETH up 30%, Sol up 23%. And if we look at like the weeklies, we're about flat, except Sol and Hype with big jumps today and over the weekend. But what are you guys seeing in macro? What are you guys seeing on chain? And we'll talk about Circle and the IPO a little bit later, but we can touch on that too about crypto people getting into equities and IPOs. But what are you guys seeing?
I was getting a little bit worried about alts, Andrew. I was like, oh, is this going to be another summer where equities just takes off without us and then alts just chop to death and slowly bleed out? But I don't know. I think after this weekend, like with some bullish announcements from Robinhood and Solana, etc., and some decent price action today, at least as of recording, feels a little bit more optimistic.
Yeah, I think we're all reminded of like summer 23 where we're talking about like decorrelating from stocks as they just like kept ripping, which was not fun to just watch for the whole summer. This time around, it feels like we're getting kind of forcefully dragged up by TradFi risk assets. Like the rally, obviously last time we talked, I think there were still missiles going off, and we're not sure if that was going to continue to escalate, even though things kind of somewhat worked out. But now the rally seems like it's not just led by like tech. It's not just NVIDIA. It's been pretty broad. It's like spreading to small caps now. So you're getting participation from like the entire market, which seems a bit healthier. Vol has come down a lot. I think people have shifted their focus away from trade entirely. Like we had a brief negative headline with us disrupting the Canadian trade talks, and then like the next day, they ended up kind of caving and rescinding the digital services tax, which I think most market participants, like their fears or jitters around trade have been pretty much suppressed by now. And I think a lot of it has to do with just looking through that possible volatility into a bunch of positive catalysts, namely massive spending bill that I think just passed the Senate, is getting sent to the House for either changes or approval, and then gets sent to Trump hopefully by July 4th. We're talking about like trillions in extended tax cuts. We're pretty much going to like blow out the deficit again. I think at the start of Trump's term, where there was this like slight focus on the possibility that he was actually going to cut into spending with Doge and other efforts, like that's completely gone now. So we're going to spend a ton of money, and that's showing up in super weak dollar, super strong risk assets. And I think beyond the spending bill and de-escalation around trade, de-escalation around war in the Middle East, I think there's also this other component of the Fed's future like independence being called into question. Trump's kind of trying to front run the appointment, which like Powell's replacement, by like multiple months. I think I forget when the typical announcement would be occurring, but like I think he's basically going to place a yes man at the Fed. He's like sending notes to Powell. He's sending Post-it notes. He's like, you got lower rates. I don't know if you saw someone was posting the physical note like the White House sent to Powell. It was pretty funny. But I actually think the market's starting to price that in. Like they're pricing in the Fed having like a yes man who's literally just going to do probably what Trump says. They're going to lower rates at least a little bit, and they're probably going to do much more accommodative policy than is occurring under Powell. So all of that together, combined with like the major hyperscalers spending upwards of $100 billion on AI capex, and then we have all these like positive crypto catalysts. We can talk about Robinhood later. It's hard to fight that combo of factors and be bearish, and stocks just making new highs. It's hard. Like I'm having trouble understanding how we would have a typically seasonally weak period.
Yeah, I was
all of that.
Yeah, did you guys see that tweet about the who founded Rice Edelman founded a $300 billion investment advisory?
Oh yeah,
says if you're
that guy's more bullish than 90% of CT.
If you're an aggressive investor, you should have 40%.
You have the financial advisors. Yeah, 40% for yeah. A lot of things are turning. I think sentiment on Twitter is not good, and sentiment elsewhere is very good. So it's an interesting combo.
I think that's always a good combo.
Even with like the treasury acquisition vehicles, like I think people on CT are kind of like, oh, they're non-factors, or this is going to blow up eventually. But things don't like blow up when they just start, like maybe it blows up in the future, but if this stuff is just starting now, yeah.
And they usually don't blow up.
yeah.
They usually don't blow up when people are saying it's going to blow up. And when no one's like in profit. But not to be flippant about that. I don't think those are good ideas like in isolation. Like we don't need them, but they are like a net.
And just to go back on Trump,
that's like kind of hard.
I was shared this screenshot from Truth Social in one of my group chats. I don't know if it's real. Hopefully it's real. But it's real Donald Trump saying, for all cost-cutting Republicans, of which I am one, remember, you still have to get reelected. Don't go too crazy. We will make it all up 10 times with growth more than ever before. Which is like a complete deviation from like everything that he's been setting up since the start of his term. And so it's like just almost like a 180 walk back now of everything that happened. That might be the most bullish thing Trump has said since he literally told us to buy the dip like 3 hours before he announced Liberation Day pauses. But yeah, like things are looking like they're completely spinning around, which is great. And it's almost like crypto it's almost like crypto doesn't want to pump. Like I was just talking to our beloved manager Ryan Graham, or Average Joe's Crypto, on Twitter, but he was like, Arbitrum waited like a good 2 hours before everyone realized that Robinhood being on Arbitrum was going to be bullish for Arbitrum. It's almost like you have to spell it out completely now why something is going to be bullish for people to start buying alts. But like it's starting to happen. So I would imagine probably a decent amount of people are still sidelined / stabled up from all the stuff that happened in Q1. And so I think slowly convincing people to risk on now for some of these alts that just haven't been able to catch a bid for months.
I'm assuming you guys saw the tokenized private stock news from Robinhood. Is that like more akin to like perps, like an equivalent like peg to the stock? I didn't, there weren't really like technical details released about it, but I feel like I didn't see anybody questioning on Twitter, how does this work?
So there was another company, I think it was called Republic, that like last week they announced a similar initiative. And I was also trying to understand the mechanism by which those work. It sounded kind of like an exchange traded note where the issuer, like kind of like a return swap of sorts, where they're basically like obligated to pay out whatever the return is on that private stock. I have no idea how that's going to be calculated, how that would be traded in real time before it's public and there's like not a liquid secondary market. And yeah, I still don't understand that. But I like assuming it's done in a way that's half decent. I imagine it would be huge. Like people would want access to even a sliver, a tiny fraction.
Well, so Republic's was unsecured.
Yeah, I'm not entirely sure how the Robinhood one. I was going to say the Republic one is definitely over the counter secondaries. I saw that somewhere.
Yeah.
and that they're going to go and like buy it for you, whatever Republic goes through the secondary
Okay.
market. Robinhood, I'm assuming, does the same thing, but yeah, I couldn't see. I mean, it just got launched today. I don't know how that actually, like, the mechanism works there.
Yeah, Republics was pretty clear about them being unsecured debt, but I feel like the interesting thing about like Robinhood is that no one's going to ask questions. They're just going to buy because it's SpaceX or it's OpenAI, and like who wouldn't want exposure to both of those? So I don't know. It'll be interesting. It kind of feels like it could get a little dangerous, but it's cool. I mean, like, it's just also the idea of like taking private. It's also like similar to this like a whole on-chain IPO meta. It's very odd to me. It's like it's interesting, like tokenizing stocks that are already public because like that gives you like an entire new market of liquidity. But to like IPO on chain doesn't really make any sense to me. I don't know if you guys have an opinion on that. It's just like it seems like people are just mashing buzzwords together.
Well, it's not. It wouldn't really be an IPO, and I think that's the advantage of doing it like this. Is it takes a lot of overhead, a lot of hassle, like just to like a lot of just upfront burden just to IPO in general, and so a lot of these companies want to stay for the most part like pretty private. Just a lot of advantages to do so, and if you can sell like some kind of offering to investors on chain without having to actually IPO and go through that whole process, then I think that's the advantage. I can see how this becomes compelling for a private company like SpaceX, especially a company like SpaceX, which, you know, Elon just brings a lot of retail attention. So maybe this works particularly well for them.
Also is pretty bullish with stablecoins, kind of like how people just got exposure to the dollar, non-US retail investors within crypto. Same narrative could be applied for these stocks, because a lot of them are not available for US customers, but we have avenues that we can go do that, Robinhood being one of them. And so now a lot of non-US customers, same with stablecoins, can now go and get exposure to some of these stocks, Apple, Tesla, whatever you want on chain.
So with the private stuff, are they still like shopping this around to bigger funds before they actually launch? Or is this just like an ICO type of like structure?
I mean, the Republic one sounded like they're giving liquidity to employees with RSUs or something.
I think so.
Is that
Yeah, that's
accurate?
what I saw.
I mean, that's a value prop in itself. It's like you've been an employee for a super long time, and then like say you're at like, you know, one of these companies that was going to IPO in 2021, and then the IPO kind of window closed on you, and then you're kind of just sitting on these shares for years without proper liquidity. It's probably a plus to be able to have that option.
Yeah, so what is this with Robinhood launching perps, Coinbase launching perps in the US? What I know, Sonny, you've tweeted about this a little bit. Like, what does this do for Hyperliquid? Is this bullish, bearish? How are we going to see the perp landscape kind of change with these like large centralized players? I know Binance has been a leader in the space for years, and so where do you see this affecting Hyperliquid and all these other perp dexes popping up? And does this get a little bit less retails using some of these like GTEs, Bullet, some of these other ones that are popping up that we know that are launching soon? Or is it just bullish everything?
My view is it's bullish everything. I actually have a hard time pinning down what consensus is here. I think it might be 50-50 split, like between people who think this is bullish Hyperliquid or net bearish Hyperliquid. But my opinion is that it's going to be net bullish. I think surprisingly, I mean, this might be news to people who are true crypto natives, but a VPN is a pretty strong point of friction actually for a lot of users. So I think if the regulatory environment opens up for perps in the United States, and we kind of get rid of that Hyperliquid VPN blocker or the perps VPN blocker in general, I think this basically unlocks using decentralized exchanges like Robinhood and Coinbase as a source of user acquisition to get them accustomed to perps, and then slowly funneling them on chain over time as they start to value different things, right? Like I think Hyperliquid structurally will always be able to offer lower fees than Coinbase and Robinhood. They just have better cost structures. They don't have any large like employee / physical / like broker or relationship overheads. So I think Hyperliquid will always be able to offer the most competitive fees. I think on-chain composability brings a lot of value add if you're looking to have funds on chain, be involved on chain, and you also want to trade perps. It's much simpler to use Hyperliquid than to move a large amount of funds back and forth between centralized exchanges and decentralized exchanges. Anyone that's tried to move like a large sum of money across like on ramps and off ramps and then to like a checkings account and back will know that it's like a pretty arduous process that just takes a long time. And so I think that will always be a part of the value proposition for on-chain venues. And then I think, some people just don't want a KYC. Some people just don't want to make an account. They don't want their data to be at risk. They don't want maybe certain people looking at what they're doing. And so I think on-chain will always offer you some protection there. And so over time, I think what I envision is, all of these players expand the pie. So like Coinbase expands the pie, Robinhood expands the pie. They're going to be marketing heavily to kind of get users accustomed to perps and interested in perps. Coinbase's perps are structured very interestingly. I think they're like long dated options. And I know Robinhood to start off won't be able to offer much leverage. And so I think over time, people will slowly want to move on chain. And if you believe in an on chain thesis, then you think if you pit the best centralized venue against the best decentralized on-chain venue, that over time users will choose the decentralized on-chain venue. And so I think if you believe that, then this is definitely net bullish for Hyperliquid because people will slowly funnel in over time. I don't think we see any core Hyperliquid power users ever want to go back to trading on a centralized exchange. At the same time, I can see a lot of centralized exchange users over time looking at Hyperliquid and going, hey, is there anything for me to experiment with here? And then slowly growing their on-chain portion of their trading activity. And so I think hopefully there will be some explosive growth all around. I think Coinbase and Robinhood will spend heavily on user acquisition. And then over time, our on-chain protocols grow as that DEX like percentage share ratio closes. And so I think this is definitely bullish for Hyperliquid. Again, I mentioned the VPN blocker. Like if we get this thing more accepted from a regulatory standpoint, that just reduces the friction for people to move on chain. And so overall, I see this as a win for everyone. I see this as the pie expanding. And Coinbase and Robinhood will also have to deal with now probably Binance and OKX looking at offering US exchanges. And so I think it'll be competitive for everyone on the centralized exchange part, whereas Hyperliquid has taken this strong foothold on the on-chain like decentralized exchange, like trading flow portion of this type of activity. And so, yeah, I'm bullish. I know people who take a different view, but I don't really see it at all. Like just from someone who's been trading on Hyperliquid, who knows the Hyperliquid community, who, has written multiple reports on Hyperliquid, I just don't really see anyone leaving Hyperliquid to go trade on Coinbase.
And also, like, to your point about people going from centralized exchanges to decentralized exchanges, like if you're trading and you're new along in your trading journey, like you're probably going to trade, like safer assets, maybe some Bitcoin, maybe some ETH, some SOL, high caps. But I'm sure that we've all had this experience where you keep on trading and you just get like more and more degenerate over time. So when you get more and more degenerate, then where do you go? You go to Hyperliquid because they have like long tail assets, they have higher leverage. So I definitely see that as a funnel that will continue over time from your first time perp trader into your like completely degenerate, what we do on chain type of trader.
Yeah, and I mean, if you're doing any sort of volume, like it makes zero sense for you to switch off of Hyperliquid. Like one from a fee standpoint, if you were doing no volume, or you're doing like insignificant volume, you're paying 85 bips on Robinhood versus half of that on Hyperliquid. And then if you are doing volume, you're talking about saving probably hundreds of thousands of dollars if you're like a serious player. So like that's not even a question really. I think they serve totally different cohorts, which is good. And you can be bullish on both of them. Like Robinhood did grow the pie, I think, a lot for the option space. If you look at, and this is where they make some 30% of the revenue, the amount of contracts traded since 2 years ago in 2023, I think is almost double. I would say like up 80%. So that's been very sticky. The retail demand for leverage through options has been very high and very sticky. Like that hasn't gone away even after the like 2022 market drawdown. And so I think them focusing on perps and introducing them to people, even if they're low leverage and higher fee, I think it will probably over time grow the pie. And it might have people kind of looking into on-chain alternatives down the line. So I also think net, like today's price action, right? Hype was up 1% to 2%. It was almost as much as SOL on the ETFs on their ETF staking news on a day where they're like a quote unquote competitor launches, a competing product. I think if Hype was just like a regulatory arb, then, we'd be down double digits or something. So I think the market's already kind of telling you that this is not necessarily a net negative for them. And it could be positive down the line as well.
Let's look out 12 months from here. Does the DEX to SEX ratio increase? Like, is Hyperliquid eaten more into it, or is just the pie grown? And like, where does the Coinbase, Binance, or the Coinbase and Robinhood share come from? Does it come from the Binance, or does it just kind of equally take away from all the options today? What do you guys think there?
I think that's an interesting question, because when people think about the DEX to SEX ratio, I think the volume ratio, I think a lot of people just kind of assume SEX is staying stagnant and DEX is taking share over time. But no one ever really thinks about SEX growth and whether or not they have inherent advantages that they can lean into and like potential tailwinds from time to time. And so I think if Robinhood and Coinbase start aggressively pursuing like derivatives volume, spot volume, if they get aggressive with listings, then honestly, you might see centralized exchanges kind of reclaim some of the shares that they've lost over the past few years. But ultimately, like, that's all going to be incremental volume. Like, that's not going to be volume in spite of like DEX growth. It's going to be basically, it's going to be more white space for decentralized exchanges over time. At least that's how I continue to view it. But yeah, I do think in the near term, you might get like some increased trading activity on centralized exchanges, particularly in the US, as all of these products come to market.
I also think there's maybe an underappreciated idea where, maybe Hyperliquid on their front end. I mean, I would bet on it continuing to eat market share from Binance, Bybit, OKX. Still, like, those charts are pretty much up and to the right, and I don't know why that would necessarily slow down. But I would say one thing they're lagging on is like Hypercore having a nice mobile front end. And now there are people building on top of Hyperliquid. There's one called Lootbase, which like is live in the App Store and Google Play Store. And they have pretty nice like Robinhood-esque UI and Hyperliquid infra on the back end for both perps and I think event trading, or like kind of Polymarket-esque event markets. I don't know if those are using, I'm not sure if they're using like HIP3 or anything, but
it's probably builder codes. HIP3 isn't out yet. I've been talking to a bunch of Hypercore builders, and the HIP3 / like builder code front end space is getting very, very competitive. Like, there are a lot of teams now looking to build and monetize this type of business on mobile, on like Telegram, on all sorts of different like UX interfaces. Yeah, I think this is going to be like the next big. A lot of VCs are asking me if they should be looking at hyper EVM protocols, which I 100% think they should. But if you want to invest in something that can make money like from day one, like, go out and find some of these front end builders and see what they have to offer. From what I hear, a lot of the HIP3 perpetuals products where people will have to stake $1 million hype to basically launch their own perps. They could launch RWA perps, they can launch stock perps, they can launch perps for really anything. Some of that, maybe from a regulatory shielding perspective, will not be available on the Hyperliquid front end. And so you're going to have to build a front end for that. And I think there's a lot of interesting teams, PvP.trade, Hyperunit, etc., looking into like building these aggregated front ends for HIP3 once that releases. And so I think that's an interesting way Hyperliquid can kind of revitalize their user growth story. And I think especially if they start adding interesting onboarding or on-ramping features where you can on-ramp to Hyperliquid directly, maybe like the lines start blurring between what using like a centralized exchange and what using Hyperliquid feels like.
Yeah, I think Shoku posted about adding like fiat on-ramps, off-ramps. Briefly chatted with Hyperbeat team is coming out with basically you can spend on a physical Visa card from your Hyperliquid account, I think either in USD HL, like whatever balances you hold on there, and kind of spend wherever Visa is accepted, which is cool. Like, I think one of the major themes for the next year or two is just this melding of on-chain and SEX and payments. Like, basically everything's converging on using crypto rails in some form on the back end, but having all the convenience and liquidity and like transactional ability as these Web2 offerings. And like, could see that with basically everyone's we're kind of converging on these like financial super apps where you have trading, you have options, you have tokenized stocks, you have on-chain stuff, maybe DeFi, you have possibly payments. And I'm sure because once you have like that entire user base there, why wouldn't you offer them all of those possible financial services? Why do we use, all of these separate apps for what is kind of all within this finance category? It seems like we're moving in that direction. Like Robinhood's actions and Kraken, and on the other side, like more TradFi firms moving into crypto, kind of seems like everyone is going to try to offer every possible product offering.
Yeah, it kind of seems like we're about to see this like next generation of neobank, like almost like how every app wanted to do like some sort of like social media or like ad distribution type of service. Like everybody kind of wants to offer payments now. Like you see it with X2 just hiring Nikita Beer seems like I might have said his name wrong. It seems like signal that like they're ready to go on chain too and maybe like enshrine Solana as like X's chain, which is really interesting because then you've got like X with Solana, you've got Robinhood with Arbitrum, you've got Coinbase obviously with Base, but like I think they've pretty much abandoned the future of Superchain. So it's like really interesting to see how like before we were just like, oh man, we've got Base, like great, like or we've got Solana. There was never a world where I could really imagine like all three prospering at the same time. It seemed like liquidity just kind of bounced back and forth. But with this like new neobank era, you might see like funds be a lot stickier.
It's kind of amazing how much the regulatory regime actually. Oh, go ahead, Andrew. Sorry.
No, I was just gonna follow on. Like it would be super convenient if you can get everything in one spot at reasonable rates. Like why have all these separate apps? Why have separate banking apps? Why have separate Cash App / Venmo-esque apps? If you could do it all in one place, I think that's very attractive. Probably part of the problem there is that personally, I don't want to trade on Robinhood. I don't want to pay. I don't even want to trade on Coinbase. Like I don't want to pay exorbitant fees when I'm trading. And so that's one impediment, obviously. But if you're like kind of basic retail and you're just kind of maybe you just have access to if some of these companies offer stablecoin savings and they pass through some of that yield, so you have high yield savings and you have trading, and people are just like kind of trading not in size, but every once in a while they make an options trade and maybe they use Robinhood Gold for whatever other services. It could be pretty attractive, and then they can upsell into other offerings down the line too.
Yeah, I feel like there's more diverse user types now in crypto than there was in like 2022 when Robinhood, like I forget the year that they originally launched crypto, but like all that to be said, I feel like we don't have nearly enough clean offerings right now for like trading crypto off chain. I mean, like it's just Coinbase more or less in the US, I guess like Robinhood as well. But to see like other projects start to enter that, I feel like is just extremely bullish, where it feels like almost going on chain at that point is like existing in the back end of crypto. It's you being manual with it. So it's nice to see that there's like just another option.
It's kind of amazing what happens when you can build and integrate with crypto in the US and not be in fear constantly of getting sued. I think like it's been clear this regulatory unlock is working, and all the best companies are in the US, and so I'm not surprised now that we have actual companies that are willing to come out of hiding and work on crypto related products and not worry about getting regulated in some form, then that all of this stuff is happening all at once. So man, this is like just overall just extremely bullish. Like this might not there's no maybe there's no directional play here on an alt you can bid and make a 10 to 100x on.
Getting on like more of the L2 landscape as Robinhood chooses Arbitrum. Famously, Base chose Optimus as super chain, but they're kind of like, I've seen some tweets, whatever, who knows if it's true or not, but kind of like really focusing on just Base and not really helping the super chain. And it's like, what does this do for the L2 landscape? Is Arbitrum no longer just a bridge to Hyperliquid? And I know we have Mega coming out, and like, so what do you guys see going on with our L2s back, or is the thesis playing out with the the L2 scaling roadmap, and or is this just Robinhood able to kind of hot swap their back end and just get lower fees for their users on the front end?
I don't know. A bridge to Hyperliquid might not be enough, but bridge to Hyperliquid and Robinhood might just be enough. I don't know, but I think look, everyone has been memeing for a while now that Ethereum has become base and Ethereum is just Coinbase. But in reality, like there hasn't been that much time for Ethereum to prove out its rollup centric roadmap. And I agree, value accrual should matter eventually, for sure. Maybe it should matter now, but at least like to kind of support this idea that this is the direction you want to head, you need more than one successful rollup. And so now that we're starting to see some more chains come out that are interesting, built off of Ethereum stack, now that we're starting to see, crypto native chains like Mega ETH come out, and also, centralized chains or quasi centralized, like synergistic chains, like with Hood and Base starting to potentially thrive. Like, I do think this is a big win for Ethereum. And, we could talk about value accrual down the line, but if you want the rollup centric roadmap to progress, then you need actual successful rollups first. And so I think eventually if there's 3, 4, 5, maybe 10 successful rollups that everyone can point to and say, hey, there's a reason for this to exist and grow, then that is going to be bullish for Ethereum's narrative. Yeah. I don't know what this means for value accrual. Like that still needs to be fixed, but at least one part of the equation is working. And so what this also means is probably like all the stuff that was built off of the modularity thesis, like all of these alternative DA providers like Celestia and Eigenlayer. If Robinhood comes on chain, and I'm sure Robinhood doesn't really track internal off-chain TPS, but that's a lot of transaction load that's coming on chain if that ends up working out. Clobs are going to be a high transaction load if they start building through a roll-up centric like framework. Mega ETH is going to need a lot of TPS. And so all of a sudden, we've gone from this idea of modular service providers being commoditized to holy shit, there might not be enough capacity for all of this stuff that's coming on chain. So I think this is like a very, very interesting development, and ultimately the pendulum will probably shift towards what Ethereum has been able to build away from like Solana's monolithic narrative. Not saying Solana is not going to grow. I just think, for a while now, it's looked like they've dominated everything. And so I think their relative narrative might change within the overall mix. But yeah, like things are starting to play out now for this framework.
Yeah, I'm not sure if the market is fully buying. Like, I think they faded this move already. Arb's down, went to 0.39, back down to 0.34. I need a very persuasive argument to buy Arb again, I think, at any point. But it's hard to ignore. I don't know. I don't know if I buy this as like a pivot for the ETH roadmap, but I think it's net good for overall industry, just like probably trading volumes. And
if no one has anything else, we can all right, we can stop talking about ETH now and let's go over to Solana. Yeah, my favorite chain. But so we just got news today that the Rex Osprey ETF is going to launch on Wednesday with staking. I guess this comes up a little bit of Ethereum stuff. Are we going to see like a wave of staking ETFs come through? I think we're going to see probably 5 or 6 Solana ETFs get approved by the end of the year. So the Bloomberg analysts are putting it 95% of approval odds. I think we also saw some big news about another Ethereum treasury vehicle with a pretty important guy. I'm not sure who he is, but I think a lot of people trust who he is, and they're raising like $250 million to have that treasury vehicle. So the question is like, is checking flows gonna be important again? And I know with like the Solana market cap and how low it is compared to the Bitcoin when Bitcoin launched and when Ethereum launched, like obviously $1 into the Solana ETF is a lot bigger impact than Bitcoin and Ethereum. And so what does this do for Solana in the ecosystem? I think it's going to be a really good thing, especially with having the first staking ETF here in the US. I know we've seen some over in Europe, but just seeing a wave of staking ETFs come through, I think this is really good for Jito and all that staking infrastructure that is over in Solana. And then, yeah, what do you see this just broader? Are we checking ETF inflows again? Is kind of where I think this could be generalized.
It's interesting because I don't know. Clearly, the ETH ETF hasn't done anything for ETH outperformance, but at the same time, like ETH is a very large asset too, and I think if any family office, like capital allocator, etc., is thinking about buying the ETH ETF, they're only one call away from any crypto native professional who can give them the spiel and let them know that Ethereum is not doing too well and Solana is surging. And so I wonder if, like, now that we have this alt ETF for like one of the three majors, like what we would consider majors, and the situation around Solana is like drastically more bullish from a relative change standpoint than the situation in Ethereum, whether or not this actually like has an impact. And so I think this is obviously just net bullish for Sol, but I am hoping that this turns out to be like a more bullish ETF than the ETH ETF, and hopefully some of like the crypto native positive sentiment around Solana like rubs off on the type of buyer base that would be interested in this.
Yeah, I'm very like I will be watching flows. I don't have any good take, or like I don't feel like I haven't even seen like a real consensus around what like performance flows wise this ETF would do. I have a hard time understanding before, like as ETH and BTC ETFs launched, I kind of assumed that allocators and the ETF issuers would market them together as just like this is like you can just bucket them together. This is like crypto asset classes. These are the two biggest ones. You can plop this in your portfolio at a 2% allocation and maybe do like 70% Bitcoin, 30% ETH or some market cap weighted thing. And that didn't happen at all. Like they just straight up marketed BTC as digital gold. That worked very well. And they totally neglected ETH. Like they didn't create a great marketing campaign around it. And I'm wondering, are the ETF issuers, like, are they super eager? Will they be able to properly craft a narrative around Sol in a way that was better than the ETH ETF ones? I'm not really sure. And I'm not really sure allocators and like financial advisors, assuming they have allocated to BTC at this point, I don't know how open they are to, like kind of adding these other tokens into this asset class bucket. I'm also curious as to a few more of these ETFs are, I think, in the approval pipeline. And they're like large cap funds. So like they're just going to buy the top 10 in a market cap weighted basket. I'm curious as to if those have any demand either. I kind of would lean towards no, just because I don't think these allocators have a good read on like each individual narrative for what's in the top 10. And to be honest, like I wouldn't even want to own most of the top 10 personally. But yeah, I'll be watching it because if it's notably different from how the ETH launch was, then I think that will be way more bullish than what is being priced in right now.
So the ETH ones, they launched without staking, right? Yeah. I feel like staking does make a pretty big difference because you're just getting them inflated away if you're not staking, right? Like if you want to capture that like Solana REV that we're talking about, like you kind of need a staking ETF, right?
Does anyone really care though? I mean, like, do you think any of the people who are buying an ETF and like not going on chain, like they're going to like that makes a difference for them? It feels pretty marginal to me.
Yeah, I might be with Hasib on this one. I don't think it makes too big of an impact. Go ahead, Andrew.
If average allocator like understands token like supply inflation, like that's I don't even know if they understand Bitcoin halvings. Like that might be it might be a stretch, and we might be overestimating. Also, just like for ETH, I don't think it mattered that much for ETH, just because the extra 3% in yields that you would have gotten did not make up for the 50% drawdown.
But what's the Solana staking yield right now? It's like
it's 7 or 8%, right? Depending on if a Trump meme coin's been launched or not.
So I feel like that does kind of move. That seems like it moves the needle to me. I could be totally wrong on this, but that seems pretty substantial.
Yeah, I think Andrew's point is it's too the token itself is too volatile for people to start being concerned with like an extra few percentage points of nominal yield. But it's definitely a nice to have. Like I think that it's just like eventually the ETH ETF should also include staking fees. Like why not? So like definitely like a nice to have, I think, but not sure if it's going to be a needle. Not sure if it's going to be like a driver of incremental flows. but I
Yeah, I think it
think
helps, and like
why not
everyone
have
said, it's
staking?
like it's not going to be with the needle, but like it's going to increase a couple basis points or whatever on performance by when you're checking those benchmarks, and they're doing it at a cool approach. It's a clever legal workaround, is what this block article that I'm looking at quotes, and saying the staking distributions to holders will be taxed inside the fund before being distributed to holders as dividends. So it'll be, I don't know if any of the ETH ETFs have dividends, but I think that'll be cool to see, like just getting returns. I don't know how constantly they'll be returned, but and then also something that might be good for ETFs in general. I don't know if they're only looking at the Bitcoin one, but apparently the SEC is reviewing in-kind redemptions for these ETFs. And so for like, if you're an IBIT holder, you can go and redeem your shares in IBIT into Bitcoin. So that, I think that's going to hopefully kind of reverse this trend of just Bitcoin dominance. Obviously, if you're buying IBIT, you haven't come on chain, but maybe who knows how much actual volume this actually brings on chain. But I think that could be interesting to see who redeems this, and then money starts flowing into the rest of the ecosystem that we didn't really see with all these Bitcoin ETF volumes. Yeah, Sam. So, taking away from the ETF and everything, what did you see at Permissionless last week? I know you saw a lot of Bitcoin stuff, sound of a lot of your reports, and so what did you see at Permissionless?
Yeah, the event itself was good. It was interesting. Like I mean, like we were kind of talking about before, there was a lot of like neobank talk, a lot of like compliant friendly DeFi talk. So like I think even though permissionless is marketed more towards people on chain than like
DAS.
forget permissionless's other conference, DA. It still felt like the vibe that I was picking up was like, how do we get the government to accept DeFi and going on chain? And how do we get like normal people on chain? So the one thing that I would say that like was a stark contrast to that was there was a lot of like Bitcoin ecosystem talk. So like I heard and I saw like really popular events from a lot of Bitcoin sidechains and L2s, like Citria and Botanics. Core had an entire warehouse rented out. So I think that, you know, there was a lot of really good energy from like Bitcoin developers there. But yeah, it was a good mix of stuff. I think that like everybody's still kind of like on the edge of their seat, like where is capital flowing next? Clearly stablecoins are getting a bid. Clearly like anything compliant friendly is going to catch a bid. But yeah, I will.
Any idea? Any talk about
enjoyed the
OpCat? Are
conference.
we still months away, years away?
Decades away. It's never coming. They might come eventually. I think one of the interesting things about like all of the Bitcoin L2s and like the whole like ecosystem is that even though they're kind of like fighting for these really incremental improvements in like trust minimized Bitcoin technology, they all benefit from OpCat getting released or any sort of like unilateral exit update that lets you trustlessly bridge Bitcoin from the main chain to like a side chain. So even though they're like building all of this tech in like the absence of OpCat, it all still gets used. All of these like L2s and like the rollups that are creating like entire environments with like DeFi protocols, like they all benefit from like merging that audience with the trustless audience. So I think that, yeah, the OGs seemed like they were excited about
That's good to hear.
everything that
Sam, you also brought up stablecoins, and I know, Andrew, you're leading this big stablecoin Bible on just everything stablecoins, and I mean the big news about stablecoins is the Circle IPO up 186% since launch, hit 360%. I think it hit almost $300 for a second. I don't know if it clipped it, but since our last recording, it's almost up 2x, and so. Andrew, what are you thinking about the IPO quickly, and then we can kind of get more on like this on-chain stuff and all about the yields and yield-bearing stablecoins that you guys are looking at.
Yeah, the IPO obviously got extremely frothy. I think the one of the guys at Artemis did a really nice valuation model, and you know he had some good like growth assumptions. It was like, oh, like USDC takes some 30% of the market and grows to even like 300 billion, which I think is 5x the current circulating market cap, and they get a lot of traction or a decent amount of traction with their payments network, which is in pilot right now, I think. And they clip, you know, maybe I think like 0.5 to 1% in fees on their payment network and assuming that gets some adoption and that grows at, some run rate that's like pretty nice. Even with all of those assumptions, trading at 300 is very aggressive. And so I think partially there was like clearly TradFi wants to get exposure to this theme. They don't fully understand it, but they know it's one of the few crypto use cases that is like seeing very steady adoption outside of just speculative trading. And it's funny because the market didn't even know. It took a while for the market to piece together that Coinbase is getting like 50 to 60% of the interest income that Circle's getting. And Coin did not move. The stock didn't move for like, I think, a week. And then all of a sudden it was up like 10% in a day because people are like, oh shit, like they are benefiting from this secular trend as well. So yeah, I think kind of an inefficient move, a little frothy. People want exposure. It's only pure play. Valuation probably doesn't make as much sense when it was trading at, I think at $200, it was trading at like 600 times earnings. And that put it at like either the first or the most expensive stock out of everything in the S&P. So, something like that. I think Palantir was maybe the front runner there. But people are clearly excited. And I think for Circle going forward, obviously further gains and distribution for USDC, like just market cap wise, will be a big catalyst. But I think they are pushing more on the payments front and trying to like get a network effect there first, because they know that issuance by itself is not necessarily a moat. You're gonna have a ton of issuers coming into the market in the next year, especially as we get more regulatory clarity. And so they are trying to like flesh out this payment network, partner with a bunch of different banks, partner with a bunch of different payment service providers. And like, you need to partner with people in every single different jurisdiction and geography. And that it takes a lot of like boots on the ground relationship building to flesh out that network. And so that's probably going to be the most important thing to track, like how much traction they get in these other geographies. Because right now, if you're just looking at volumes, for one thing we did for this report was looking at these peer-to-peer marketplaces where they're hosted on centralized exchanges, but they're kind of like an eBay for local currency transactions. So you can post bids and offers, but they're like they call them advertisements, and you can be like, I'll buy 1,000 USDT for X amount of Argentinian pesos. And on the back end, basically, these people who have local bank accounts in those countries, they will, if you you initiate a transaction, they will send and wire money to your local bank account. Then you on the SEX, you notify them that you received the money, and then the USDT that's held in escrow will be transferred to this person who's on the other side. So there's like these local market makers and arbitrageurs that work in these markets, and all of the volume is in USDT, like 90%. And the spreads on the USDC quotes are super wide. It's very hard now that people have just been used to using USDT in those emerging markets, just for literally for years. It's very hard to supplant that network effect and those like the liquidity you get when you're trading one quoted pair versus the USDC one. So like, I don't think Circle can really win on that front, like on this this like kind of offshore dollars / unregulated local currency exchange front. Like Tether's already won that, and I don't think that's changing, but it's possible they become a strong competitor in the payment space if they can, it's a bit of an uphill battle fighting people like Stripe. And I think we're going to see them compete neck and neck over the next 2 years. Should be interesting to watch.
I think just speculating and commenting on like the Circle IPO and the crazy price action we've seen, I think what we're seeing is a bunch of growth investors and growth funds who had their day in the 2010s and are now probably vastly overexposed to AI because it's been the only thing growthy that they can buy, looking over at the Stablecoins narrative and at the Circle IPO and going, yeah, we'll bid this. Like this is exciting enough. I think for these types of investors, all that matters is the addressable market is enticing, that the growth narrative is exciting, and they'll figure out the fundamentals later, or maybe just never figure it out. So I think like, yeah, it's interesting because maybe stablecoins to like crypto native people are like the most boring narrative ever, but to a bunch of growth investors who have been starved for like any narrative to latch onto outside of AI, it's probably really, really exciting. And so I think anything stablecoins related or even crypto related, as we're already seeing with these like publicly traded tickers, is going to continue to accumulate like some of this latent like growth capital that has just been like looking for something else to latch onto.
Yeah, and it's honestly, it's been very bullish in stock land. Like most of CT was talking about Robinhood when it was at like $10, and they were liquidating people's Solana's holdings at the bottom. But like despite that, like people called the Robinhood move, they called the Coinbase move. Galaxy's got uplisted to the Nasdaq and is actually like a hybrid AI crypto play. And I actually think that's something that's going to catch up at some point. But I would say more broadly, yeah, a lot of these growth stocks have just been incredibly strong. Like they're on full bull market vibes right now, so it's hard to ignore.
Are there any worries, or is it bullish circle, or with that like that 3-year time period for USDT Tether to become onshore and become regulated? Like, is there any worry for the USDT side, or is this what might explain some of that premium on Circle for just having that like maybe regulatory arbitrage?
I think people think that future regulatory clarity is going to be like net negative Tether, and I just don't agree. I think they're incredibly sticky, and they'll probably find ways around increasing regulatory clarity. And moreover, I think if the government really had a problem with them, they could crack down. And instead, I think they're going to use them and stablecoins more broadly as a very effective, constant bidder for massive T-bill issuance. And I think that's going to be like an active part of their strategy. And so I would not be like trying to get bearish Tether's growth prospects. And if they were even remote, like public somehow in some vehicle, like that thing would be just trading at an astronomical valuation, I think.
Yep, one of the most profitable companies ever. And so if they're profitable, they probably have the reserves to back it up. But let's switch it up to like kind of what we're doing on chain. And I know, Chris, you've been looking over at some Launchpad wars. I know that really was kind of a hot narrative like about a month and a half ago when Jupiter launched one, Radium launched one after Pump famously launched the Pump Swamp. And so you're talking about this useless coin, which I'm looking at the chart. It's just straight up for about the last 2 weeks. And so what's the history? Useless. What's the ties to Let's Bonk? And are the Launchpad wars heating up? Do you think they're taking away some of this, the Pump Fun Launchpad? I know with people might be farming points or whatever, they might be speculating for that Pump token launch sometime soon.
Yeah, I mean, I think it's definitely possible that Pump should like maybe start getting a little bit nervous. We looked last month at some of the like market share charts around Launchpads. It's just really clear that Pump is dominant and like has successfully fended off people trying to eat into its market share. So, I mean, like I wouldn't bet on another Launchpad like overtaking Pump or anything. But I think what's interesting with Useless is it's the kind of like been dubbed the canonical coin for Let's Bonk. Like it's just the leader and it's clearly sending pretty hard. In my opinion, if you're a Launchpad, you need one coin to like totally send up to 9 figures to consider like getting more people onto your pad, because there's kind of like this high watermark that people look at, like what's the highest that a coin can get to. And we saw with Pump.Fun, like there have been coins that run into the billions, right? So I think it's pretty bullish for Let's Bonk if this thing keeps on performing well. I also think it's interesting that Moonshot is stepping in now with their own Launchpad platform. It seems like they've been doing a pretty good job at like rallying around this coin, Mooncoin. And like the actual Moonshot team has like, responded to replies and stuff from the Twitter account of the coin. So I think they're approaching that in the right direction. It's just hard because like historically you look at other Launchpads that try to eat into Pump and it's just like has never succeeded. Like there's such strong network effects around Pump. But I'll be interested to see over the next couple months if anyone can actually meaningfully eat into it. Like I thought it was going to be Launchcoin at first and like maybe that ecosystem would eat into it a little bit. But it seems like Let's Bonk is doing pretty well. So it'll be interesting to see what happens.
Yeah, is there anything still going on Launchcoin and in their platform?
Honestly, I don't know. I mean, the coin's holding up decently, but I don't really know anything about like their ecosystem. And if anything is like actually interesting. I know they have that whole thing, like, was it Clev was the one who was doing that? Yeah, so
Cled.
I don't know. Seemed pretty scammy, but I don't know if anyone else has takes on it.
Goon Coin's up 100% today. So clearly people have not forgotten about the launch.
Chris, you doing anything else on chain, or is it just really looking at these launch pads?
Oh, yeah, I'm not doing too much actually. I've kind of tapered off some of my activity on abstract recently. So I'm just looking for new stuff. I was on vacation last week, so I took a little bit of break from everything. So gonna be getting back on chain this week.
Any news on abstract TGE? Anything? Have we heard anything about that?
People are saying Q4. Obviously, this stuff is like, who knows? But
Cool,
that's the
good to know.
estimate that they're
Sam, what are you doing on chain?
Hyperliquid, perps. I'm kind of bored, to be honest. I'm like hoping that we get like a little bit of like either an ETH DeFi renaissance with like Arbitrum coming on. Like tokenized stocks would be fun. I've been complaining about how it takes like 3 days to get funds in a brokerage, and I've been lazy and haven't traded stocks at all. So this might be my opportunity to start playing with equities more. But I don't know. I could see the same happening for Solana if X like makes some announcements about integrating them for payments. Like I think it would be really. I would also say from a different perspective that we could see some value accrual from stables. So I see a lot of ways that DeFi protocols could succeed in like maybe potentially the next few months. Like we've already seen it with some of like the new gen protocols like Syrup and Euler, which like have just had absolutely insane TVL growth. Same with like EtherFi and their like card payments. They're taking more of like a neobank perspective. Eigenlayer kind of rebranding to this like cloud platform, which is like significantly less confusing. So I think it's a great approach for them. Yeah, it would be cool to see us have like a DeFi resurgence that wasn't just surrounding me.
Yep, totally agree. And I liked that Nikita Beer hire by X that we just saw today for head of product was just an advisor at the Solana Foundation. So maybe there's some front running possibilities there that could be pretty cool. And as you see with Arbitrum go with Robinhood, Base and Optimism, and then Solana X, that'd be a cool 3 centralized players that are kind of getting on the on-chain world. Obviously, all speculation with a X Solana payment integration, but I can hope. Yeah. Andrew, what are you doing on chain?
Yeah, not too much either. Just kind of still farming Hyper EVM. I have like a little hype stowed away for Kinetic, which is the liquid staking K hype, which I think will be launching somewhat soon. I'm just trying to spread my bets over there, like mostly like parking BTC and hype across different DeFi protocols. I think that will be worth it. Like there's literally only sub 30,000 DAUs on Hyper EVM right now, and I think there's a lot of like cool teams building interesting stuff. Like some of it's obviously kind of copy paste, but I think there's like a lot of high quality builders as well. So yeah, I just think that surprises to the upside at some point, and probably if you're going to hold BTC and you're going to hold some hype, it kind of makes sense to interact with those. But yeah, that's literally for probably the past month or two, that's all I've done on chain. So yeah, also echoing Sam's sentiment of being a little bored. So
Sonny, what about you?
Yeah, 3 things. I think the first thing is tons of great inbound coming in from all sorts of clubs that want me to try out their product, and so that's been really fun. Although it's starting to get a little overwhelming. I'm sorry, guys, I can't write about everyone. There are so many clubs out there that I was not expecting to exist, but they exist, and all of them are building really, really great things. Also, just saw a tweet that Mert says you can now just swap for tokenized stocks, I guess, in these Solana pools. And so I am going to go probably buy my first stock on chain now that it's on Solana. I don't know what I'm going to buy yet. I'll shop around. I don't envy any of these compliance analysts or compliance people at financial services firms that now have to make sure their employees are not buying stocks on Jupiter and Radium. But yeah, it's definitely this is the real internet capital markets vision that we've been kind of waiting for. So I can't wait to go try that out. And then the last thing is I think I'm gonna have some funds kind of reserved for this pump launch. And everything that I've been hearing is that the initial ICO is massively oversubscribed. People can't even get in at the right limits. Basically like the pump team is kind of capping investments now from different funds because the demand has just been so strong. And now that I think about it, and I've had some time to kind of think about what pump might get to, one, there are not very many teams in crypto or tokens in crypto that you can buy with an access to a $1 billion treasury to invest in growth. 2, I think the incentives of the pump team are very much aligned with having this token launch go well. And so they're going to do whatever they can to try to get this price action going, which means, announce some bullish things, announce a buyback of some sort of like just capital allocation to give token holders some buy-in. And then, to me, it's only probably a matter of time before they announce, a 25% share drop for people who have been using pump fund projects. And, if they do it right, if they do all of those things, I really can't fathom how Pump Fund doesn't do well. If the Pump token launched at a $4 billion valuation, it would barely crack the crypto top 50. And that just seems like way too out there for the most profitable crypto application of all time. And, I'm not going to sit here and give hard price predictions, but I think it can get pretty crazy. I think if you're looking to buy Pump at 4 billion at launch, I don't think you're going to get an opportunity. And I think there are a lot of people who are sidelined that are going to be waiting for that token to become liquid. And everything that I'm hearing is that it's going to launch soon. And so I'm ready. Like it's going to be a liquidity black hole, but some of these token launches come around once a cycle, twice a cycle, maybe 3 times a cycle, and you don't want to miss out. And so, yeah, I think it's going to be a crazy like world sucking event on Solana, and I'm excited for that. So kind of preparing mentally for what I'm going to do when that thing goes live. But that's about it.
Yeah, no, totally agree with everything you just said. And I was looking at some of these X stocks before we hopped on the call and forgot to mention that, like, don't buy the Apple one right now. I only saw like $100 in liquidity. So there was like a 20-30% premium on it from just buying it in Robinhood. So, but NVIDIA, there's 300,000 in liquidity. So it's going to be interesting how they roll those out over today. But yeah, definitely going to go play around with some of those. I minted an NFT last week. I don't know if I should have done it, but it was for one of my favorite projects, the player 1s and player 2s on the PSG one. So that was pretty fun. But yeah, someone who missed most of that hype growth, I'm definitely not going to don't want to miss this Pump Fund launch. But yeah, if anybody has anything else, I think that was a great episode. Thanks to everyone that's still here and listening. And thanks for Sam for joining in. We're going to have to get you back on more frequently. And thanks for joining in and do all the normal podcast stuff, like, subscribe, download wherever you are. And we'll see you in a couple weeks. Thanks, everyone. See you guys.